So I recently shared some information about the concept of nexus and moving to a different state to avoid certain levels of income tax. Well, that got a tremendous amount of interest. Over 5,000 people saw that, so I wanted to share a little bit more about that topic today. Hi, my name is Chris Passmore, CPA. So economic nexus, that's the concept I want to talk about today. So what is that? So that's the concept that you're actually doing business in a state, even though you might not be physically there. You might not have an office building, a warehouse, or restaurant. So how do you establish nexus? Well, this significantly changed in 2018 with the court case of WAYFAIR versus South Dakota. Previously, as this was for sales tax, they said you had to have a physical presence in a state to have nexus or to have taxes due on activity in that state. With that case, that whole thing changed. So now the concept of economic nexus is much more broad. You don't have to have a warehouse, you don't have to have an office or an address, and you may still have a tax liability in those different states. And so there's a few things to keep in mind here. It's different for every state. Each state has a different threshold, different test to see if you are doing business in that state. Oftentimes it's based on a minimum threshold. It could be revenue, it could be related to payroll, it could be related to equipment in that state, and what may be applied in my state in California would be different in other states as New York, Connecticut, South Dakota. And so the concept can apply differently in different scenarios. So you have the idea of selling a product. Think of Amazon as an example. If you order a product and Amazon ships it to where you live in Florida, that could be considered nexus in Florida because they're selling product to there. Well, also, how does this apply to the concept of services? You have an employee, an example, let's say for me, I provide CPA services, but I'm based in California. What if my client is based in Texas? So this is where it's different based on the states, and you have to be familiar with the rules of your state. So sometimes it's based on where the person's physically located. Where I would be physically located in this example would be California. In other states it's based on where I'm providing the service to, who's actually receiving the benefit of my service. And in that example of me providing a service to a client in Texas, there would be nexus for me in that example in Texas, which would mean I have a potential tax liability in the state of Texas if I meet certain other thresholds. So again, the concept here is different by state, and that's why it's so important that you figure out what's applicable in your state and how you could qualify as having economic nexus in these states that you operate in. So a few triggers for nexus are where your payroll is, where you have employees. So you, especially nowadays if we're all working remotely, if you have employees in other states, you could have a economic nexus presence in the states in which they operate. Let's say that you have an employee where they decide to move to Chicago because now they can work from anywhere, and now you have payroll in the state of Illinois. Well, that could trigger economic nexus because now they're paying payroll because you're paying payroll in the state of Illinois. It could also be based on where your property is. I have several technology clients and they have servers. So where are those servers housed? That could be property in that state, which triggers economic nexus. And lastly, it could just be straight sales, and that goes back to the concept of Amazon. If I'm selling a product to someone based in Florida, that could create nexus in the state of Florida. So let's talk about California specifically and what's considered doing business in the state of California. And generally the sales number, it's $500,000 to $600,000. That's the minimum threshold that would trigger a reporting obligation. Below that amount, you do have a safe harbor. Or alternatively, you have $60,000, approximately $60,000 of either fixed assets or payroll that would trigger a potential reporting obligation. So you can see that nexus is a very complex issue. You could have the best of intentions where you move to a different state to avoid taxes in maybe a high tax state such as California. But if you don't think about all these other issues, you could get caught and not be in any better situation if not planned properly. If you have any questions about Nexus or would like more information, please send me a direct message and I'd be happy to talk about it with you further. Thank you very much.